Hey guys, so I'm kind of playing the reverse of the market, what the market's thinking here. The market's always thinking um, it's kind of behind the curve. So when we were bottoming out and people were in full panic mode, I was looking a little bit constructive on the chart patterns that were forming at the bottom end of the S&P 500 that we were looking at. The Nasdaq never broke its long-term trend line. There are some positives there for sure. So we were treading lightly on the bullish side. And giving the market some room to do what it wanted to do. So just like that was full-blown panic, today seems like full-blown enthusiasm. So you have to kind of take the reverse stance as a trader in the market. And here's the cues today from the open. I think we're going to go down. These are trend lines that I've drawn from a long time ago. By the way, that was Gilead, which I still have a little bit short. I'm looking for lower prices. I shorted it in pre-market and then shorted it out of the gate. I probably could have got a better fill. I got 87.20s and then I got short as soon as we opened up again. I don't like to short in pre-market because it's a little bit harder and choppier to put in stops and kind of figure out where we're going. I'm still looking for this to pull back. I'm still looking for 81.10 and then 80.60. 81.10 and 80.60. But we'll see. Too much enthusiasm makes me cautious. And then here's the cues. Everything worked out great because I was in a jam from last night being short. So I added in pre-market and kind of got myself back to even from yesterday. Yesterday I had a nice gain, so I didn't want to give that all up. Here's the cues. Let's look at it from a larger perspective. And let's kind of scroll back here and do a 3-year daily and kind of see what we're looking at. And let's get rid of this candle right here. Or not candle, but and let's remove that one. Alright, so here's the cues. Panic, FOMO, and then exuberance, blow off, upside blow off here. And as we zoom in, we're talking about, once again, the reversal, bounce, failure before the big move down. So this is a ton of congestion in here. In fact, these candles are all failure candles that preceded the big move down. So if you look at the top of this doji here, you're at 216.73. Let's see what the high of that candle was. 216.36. And the high of the candle today is 216.51. So with a little extra enthusiasm from the Gilead news, we can certainly see how we could have pushed through that candle there, but there is a lot of resistance in here. And this move has led the market. So first leg up, consolidation, second leg up. We were trying to consolidate. It looked like we were going to pull back, and we would have pulled back without the Gilead news, in my opinion. So we were looking for this kind of trend line channel to continue, and I'm not going to draw from the bottom here because actually I got the wrong one there. I'm not going to draw from the bottom because that bottom was your little bear trap reversal outlier. I don't really like to use that as a reference for my charting. I kind of think the channel kind of runs like this a little bit, and then if we add the channel on the upside, it kind of looks like in this area here. So we were kind of pushing through, and we would look like we were going to roll back over, then kind of, depending on the time frame, go back and retest the top consolidation area, depending on the time frame, like I said, in the lower part of the channel. The Gilead news comes out, and we get this artificial pop to the upside, which is also bullish. It tells you there's a lot of pent-up demand and positive attitude in the market. We're just looking for a catalyst. Just like on the downside, the catalyst was a market that already wanted to sell off, was overextended to the upside on multiple levels, and then obviously you see the virus being the catalyst. Gilead was a catalyst today for the blow-off to the upside. So don't want to chase this move. In fact, I'm still short using the SQQQ. At least looking for a pullback to the trend line here intraday, which would be the 213s and change, and we're slowly getting there. I might actually hold some because from a bigger perspective, if this is the end move of the leg up, then we should cycle down quite a bit further. But there's obviously the Fed and the the Gilead safety net. So we'll call that the the Gilead Fed effect. And let's see what we're looking at intraday here. So if we break this line here, I think we're going to go down and retest the lower areas on the Q there. We're getting a little oversold on the RSI. I did sell some SQQQ on this first bounce. Once again, these trend lines have been drawn from a long time ago, so they come in handy. If we bounce ahead of that, it means like we're trying to get back up to the top end of this channel here, which I still put as a downward trajectory here. So we'll see. I think we push through there and fail. Some of the stuff that I was buying in after hours did pretty good. I sold a lot of it. It was kind of my hedge because I was coming in short and a little bit worried about how far this move could extend. I had some JetBlue I sold in pre-market. I still have some left, but that's more for a long-term investment. I was short gold. I still am short with JDST. That's really non-directional. I like gold. I just think it pulls back here with this move. I had some MWA, Mueller Water, and I had a lot of RWT, which I sold some in pre-market in the 370s, but I'm actually holding the rest of it. Just kind of see how this goes here. If anything's going to move, and this is a legitimate end-all bear market to bull market transition, then stuff like RWT and TWO should outperform the market. So I'm going to keep my little shorts on here. My SQQ is doing just fine. I'm in the low 12s, and we're at 1272. My SPXS I added to, but I'm being cautious here. I don't want to try to fight the trend if the market wants to continue to leg up. I just think this has been, just like the bottom was overdone, the top is overdone here. So I'm taking advantage of the market psychology and doing the reverse.